Hello everyone, welcome again. In one of the previous videos, what we have learned so far is that we have took accounting profit and we made some adjustment to that. Now while making some adjustment to that, we have deducted few expenses which you should not have deducted for our tax purposes. Alright, so while we take our accounting profit, so from our accounting records, so we take our accounting profit, which will be our net profit obviously, then we will make some adjustment for our tax purposes. So we will add back the expenses which you should not have deducted for tax purposes, so we'll add them back. Then we will deduct few expenses which were not deducted in our accounts but which tax people say that they should have been deducted, so like capital allowances for example. Now in this lecture we are going to look at the capital allowances. Now this is the expense which we deduct out of the trading profit. So while we take the trading profit, we will deduct capital allowances out of that. Now you remember that when we were making the accounts and we were making the adjustment to the trading profit, we added the depreciation back to the profit. You remember? Now why did we add back the depreciation? Because they say that it is not an allowable expense for tax purposes. So that's why we have added it back. Now basically depreciation is for accounting purposes, so whenever we buy an asset then we gradually decrease its value and that is known as depreciation, right? For our tax purposes we cannot take the depreciation to reduce the value of an asset. However, for tax purposes what we can do is we can use capital allowances instead of the depreciation. So basically capital allowance is exactly the same thing like depreciation, but for tax purposes we do capital allowances instead of the depreciation. Alright, so in this lecture we will study the depreciation. Now depreciation for taxation, when I say depreciation for taxation purposes, it means capital allowances. Alright, so we will study capital allowances in this lecture. Now if you remember, while you used to calculate the depreciation in your accounting studies, there were few ways to calculate the accounting and there were few ways to calculate the depreciation. Remember straight line method, then reducing balance method, and another one was sum of digits method as well. Now you might not know the sum of digits method because it is no longer allowed by the standards, but it was also one of the methods which were previously allowed in the standards. But we are not studying the accounting depreciation in this video. We are studying the capital allowances. For capital allowances, there is only one way to calculate the capital allowance, which is on the reducing balance method. So it is not on the straight line, it is on the reducing balance method. Alright, so we will study the capital allowances in this chapter. So what we do is we take the trading profit and we deduct the capital allowances out of that. Now obviously capital allowance is the depreciation, we know it, so obviously it will be on the different assets, and there is different percentage for the different assets, so we will see the percentages as well. And again, that if the asset is provided for less than a year or more than a year, then obviously then percentage will need to be adjusted for because it is more than or less than a year. Alright, so I'll just quickly share the screen with you so that we can study the notes. And now we are at the chapter number 8 of the P6 lecture notes. Now if you could please download the lecture notes and come to page number 36 of your lecture notes, and it is chapter number 8. Excuse me. As you can see on your screen now, and that is chapter number 8, capital allowances. Now capital allowances in the brackets, it says plant and machinery, so it will be on the plant and machinery, and it will also be available on the cars as well. Now we will see different percentages and different rules for the capital allowances gradually while we read our notes. Now first type of capital allowance is known as a written down allowance or writing down allowance, and it is a standard 18% rate which is allowed. So we'll take a written down allowance of 18% on reducing balance method is given on the plant and machinery in each accounting period in the main pool. Now while we do the capital allowances, we will divide different assets into different pools, into different columns. We will do a question as well after, then you will understand it better, but we will divide the assets into different pools. So excuse me, so whatever is in the main pool, and we will take writing down allowance at the rate of 18% on that. And obviously, as I said, that if the writing down allowance will be months over 12, if the accounting period is more than or less than 12 months. So if the accounting period, it will tell us in the question that if the accounting period is more than 12 months, then we will have to adjust this percentage, and if it is less than 12 months, then we will have to adjust the things as well, adjust the months. And after that, it says full writing down allowance is given the year of purchase. When you have purchased the asset, you will get the full writing down allowance in that year, whereas in the year of sale, you will not get any personal allowance at all. Right, so it was a writing down allowance. Next one is annual investment allowance. And now annual investment allowance is only available on the first £200,000 for our current tax year. So it says that businesses can claim an annual investment allowance on the first £200,000 spent on the plant and machinery. So whatever you spend on the plant and machinery, first £200,000 you can get capital allowance on that as well. Now annual investment allowance will also be months over 12 if the accounting period is more than or less than 12 months. Alright, after calculating annual investment allowance on plant and machinery purchased, writing down allowance will also be given on such plant and machinery. So first what we do is we'll calculate the annual investment allowance first, then whatever the remaining is, if there is any value still remains, then we will do the capital, we will do the writing down allowance as well on that. Now how much is the percentage of writing down allowance? 18% obviously. But we cannot claim annual investment allowance on the cars, so there is no annual investment allowance on the cars. The next one is the first year allowance. A first year allowance of 100% available on the cars which you purchase and are with the low emissions. So for example, if you purchase a car which emits CO2 emissions of 75 grams per kilometer or less than that, then 100% of first year allowance will be available on that car. However, we cannot reduce or increase this 100% like we used to do for writing the allowance and annual investment allowance. It will be 100% straight away. So we cannot use to increase it or decrease it. Excuse me. Next one is enhanced capital allowance. Enhanced capital allowance expenditure on energy saving or water saving plants and machinery qualifies for 100% of annual enhanced capital allowance. So it will be 100% on two things, which is first one is energy saving and the second one is a water saving plant and machinery. So it will tell us in the question that this is the plant and machinery which we have bought, and it's saves some water or something like that. So it will tell us in the question. Likewise, if there is any expenditure on energy saving plant and machinery, then you will also have 100% of enhanced capital allowances. Right, now next one is a special rate pool. Now we will make a separate column for separate special rate pool as well. Now special rate in the special rate pool, there is a different rate on that. For our current tax year, it is 8%. So whatever the value of the asset is, it is 8%. Now on what assets can we claim the special rate? Special rate on which assets can we put in the special rate pool and can claim capital allowance at the rate of 8%? Now there is a list. Expenditure on thermal insulation, solar panels, long life assets, features integral to the building, and cars with a CO2 emission in excess of 130 grams per kilometer are included in the special rate pool. Alright, so we will not put these things in the main pool, we'll put these things in the special rate pool. Writing down allowance of 8%, and obviously it will be months over 12, on the reducing balance method will be given on such assets. So when I say months over 12, it means then if the year accounting period is more than 12 months or less than 12 months, then we will do this thing. Excuse me. Now annual investment allowance is used against the expenditure in the special rate pool first, then against the main pool expenditure. Alright, now when you are using the annual investment allowance of £200,000, first you will have to pick the assets from the special rate pool, then you can use from the main pool. Alright, now obviously when you pick from the special rate pool, it is also beneficial for your own self as well, because in the special rate pool the tax rate, the capital allowance rate is 8%, you will get less personal allowance, and in the main pool you will get the writing down allowance at the rate of 18%. So it is beneficial for you to use it first against the special rate pool while adjusting for the annual investment allowance. Now, what are the long life assets and what are the integral features to the building? So there is a list given here. Long life assets are the assets with the life of over 25 years and which cost more than £100,000. And integral features to the building are given to you just beneath that, so you'll have to just read it yourself. What are these? Then it says plant and machinery with private use. So whenever you see a thing with the private use, you will have to make a separate column of that. And when it says private use always means private use by proprietor, right? Because private use by proprietor is actually a private use, but if it is private use by an employee, it is not a private use, is it? Because private use by employee is a business expense, but private use by a proprietor is not a business expense, it is a private expense. Alright, so try to differentiate between these two, that there is a difference between private use and the business use. Now, business use is a use which is for the business, and private use is which the proprietor takes something for his private use. Now, when employee is doing some expense for private purposes, that is expense of the company. Whereas if an employer, if the proprietor use something for private use, that is the private use. So there is a difference. And we will only be able to claim the capital allowance on the business portion. We cannot do it for the we cannot claim it on the personal purposes. Alright, so it says if there is a private use of the plant and machinery by the proprietor, not employee, then capital allowance is calculated on the full cost, but only the business proportion of capital allowance can be claimed in order to deduct it from the trading profits. Alright, and in the notes it says not applicable for companies. Now, what's the reason behind it is that if for companies, if you look at in the companies, there is no private use by the proprietor, right? Because proprietor, who is the owner of the company? Owner of the company are the shareholders. Shareholders are the owners of the company. But shareholder in most companies does not work for that company, do they? So if they do not work for that company, obviously they cannot use anything for private use. So the only private use will be private use by the employees in the company. So private use by the employees is not actually a private use, it is a business expense. Alright, so that's why this thing does not apply to the companies, because in companies there is no proprietor who can use things for his private use. There are only employees, and if employees use anything for private use, that is a business expense. So that is the reason it says not applicable for the companies. And another note says that such assets must be kept separate from other plant and machinery calculations. As I said, we'll make a separate column of that as well. And after that it says the balancing allowance and balancing charge. Now, when you sell an asset, if you sell at higher price, obviously whatever the whatever the written down value is, if you sell higher than that, then obviously there will be balancing charge. If you sell lower than that, if you incur a loss, if you sell lower than written down value, then obviously it is a loss and it will be a balancing allowance. Now, on the sale of the plant and machinery, balancing charge. On sale of the plant and machinery, profit. Now, when it is profit, it will be balancing charge. You'll have to pay tax on. Or if it is a loss, then it will be balancing allowance will be calculated. When an item of plant and machinery is sold, then for calculation purposes, the sale proceeds are taken as lower of sales than original cost. And normally, which is a profit, balancing charge or the loss, will not be calculated for the sale of assets in pool unless assets in the main pool, assets in the pool are sold when the business ceases. So we will not normally calculate. So it says that we will only calculate when the business ceases, but we do not normally calculate it. The next one is a small balancing claim. Now, what happens is that whenever you see the writing down value of a thing, writing down value of an asset is less than £1,000, then the whole amount, whole amount will be your capital allowance, because it is a small balance. And when it says small balance means less than £1,000. when you see a balance of less than £1,000, the whole amount will be capital allowance, so we do not need to take 18% of that or 8% of that. All right, now that will only apply before charging any writing down allowance. All right, so say for example, when at the start of the year the value was £900, then the whole £900 will be the capital allowance. So it will only apply before applying the writing down allowance. So if the balance in the main pool or special rate pool before claiming, as I said, before claiming writing down allowance remains less than £1,000, then the entire amount in the pool is written off instead of the carrying forward. So we'll use the entire amount instead of the 18% or 8%. Now when I say entire amount, what would be the entire amount? Entire amount will be added in the capital allowance. So all of these things are capital allowances. So we'll keep adding all of these capital allowances. So whatever the big chunk will be at the end of the capital allowance figure, that will be deducted out of the trading profit. And then it says capital allowances for the cars. So what would happen about the cars? Now if it is less than 75 grams, and then we will get 100% of first year allowance as we have seen earlier. And if it is 76 to 130, then it will go into the main pool. And if it is over 130, then it will go into the special rate pool where the rate is 8%. And if there is a private use by the car by the proprietor, again not employee, then the capital allowance is calculated on the full cost, but only on the business portion you will claim the capital allowance. Right? And again it says that it does not apply to the companies, because in the companies there are no proprietors who can use the cars for private use. Such assets must be kept separate from other assets in the plant and machinery calculations. No annual allowance, no annual investment allowance is given on the cars. Now this is important, that you cannot claim an annual investment allowance on the cars, so you have to remember this as well. All right. Now on the next page there is a comprehensive example on page 38 of lecture notes. There is a comprehensive example. Now I will do this example on the board now, and I want you to do it as well. When I complete this example, then I will explain a few things to you as well. Now, it is very easy example. Everything is exactly the same which we have just covered. You just need to make the pro forma. Now, say for example the main pool, special rate pool, then obviously we'll make a separate column for the assets with the private use. Say for example there is an asset with 10% private use, so there will be separate column for that. If there is another asset with the 20% private use, you will make a separate column for that as well, right? So if there is different percentages, if there is a different asset, then obviously you will make a different column for that. All right, so I will just do this question, and then we will then I will show you the reasons behind it. So it's 100,000 plus 20,000 plus 3690 plus 194 plus 14 grand, 164,884 less 3,200, 161,684. Yep. I've finished the question now, and I want you to please open up your notes. Because the screen is not shared, obviously, because you can't see it if I share the screen. So it is exactly the same question which is on page number 36 of the lecture notes. 38 of the lecture notes. So please open up your lecture notes so that we can, I can show you that how I did this. And if you did this earlier, then you just check your answer that if you have done it right or not. Now, if you haven't done it, just pause the video and have a go at this example, and then just look at the answers and check your answers. Excuse me. Alright then, so that is exactly the same question. So we'll read the question together. It says Paul is a sole trader. The balance as at 30th of June 2015 for the capital allowance was as follows. So it gives us opening balance. So what I will do is I will write down tax written down value brought forward. So that is our opening balance. Now in the main pool, it tells us that it is £20,000. So I've written main pool here, and that is £20,000 in the main pool. Then it says special rate pool £40,000. So I made another column for the special rate pool, so it will be £40,000. Now you remember that in the special rate pool, the tax will be capital allowance will be at the rate of 8%, where in the main pool, whereas it will be 18%. And remember, it is only for per annum. So if the transactions, if the accounting year is less than a year, then we'll have to take it according to that as well. The next one is laptop used by JAMS. So laptop used by JAMS, and there is a 10% private use as well. So that's why I've made a separate column for that, because it is separate asset with the private use. So that's why I've made a separate column. Excuse me. And it is £2,400. Then there is a car with 110 grams per kilometer CO2 emissions used by JAMS, and it is 20% private use. So I have written down that as well. So it is £8,000. So that is our opening balance. Then after that, there are a few transactions, and if you look at the transactions, they are, he bought few cars, then he bought some, a van, plant and machinery, and then some, lifts for the solar office building, then solar panel, and finally bought a computer as well. Now after that, there were some disposals as well. So he sold a car which he bought earlier for £12,000. So car with 110 grams per kilometer CO2 emissions used by JAMS, which is 20% private use. All right. Now this car he has sold now, which he bought earlier. If you remember, on the opening balance, £8,000 worth of car, he has sold it for £12,000. So what we do is that is £8,000, which was opening balance. So what I have done is I've deducted the disposals out of that. So that is £12,000. I told you that if it is now, because its value was £8,000, so he sold it for more than £8,000. So that's why it is balancing charge of £4,000. Now although it is negative, it looks like it is a loss, but it is not a loss, it is a gain. Because it is coming into negative, because we are doing the calculation of the capital allowance. Now capital allowance itself is in a negative, right? So it will be deducted out of the trading profit. When it seems like it is a loss, but it is not a loss, it is a gain, because you won't get it, because it will reduce the capital allowance, right? You will see here when we do this calculation. Anyway, so let's look at the different transactions. So first of all, car with 70 grams CO2 emission for private use, for the use of the salesman, 10% private use. Now this private use, although it is a private use, but it is private use by the salesman, and it is private use by an employee. Now if there is private use by an employee, then there is no separate treatment, because I told you that we will only consider the private use by the employer, by the proprietor. All right. So it is 70 grams per kilometer. Value is £20,000. So this car is eligible for the first year allowance of 100%. So what I did is, that is a car, if you see. So car with £20,000 first year allowance. So that is added. Now proper way to do it, although if you look at the question, it is a different way, and you can do it like that as well by looking at these requirements. Or if you want to do it after reading the question, the way I did it is a little different, because I did it with the proper way, because I knew that there will be main pool and special rate pool and the things like that, because I made the question, so I know it. But if you would have been doing, you might have written this thing first, because you find it first in the question, so it is perfectly alright, there is no problem. The way I did is I first added the things which we must add for the special rate pool, because we claim the annual investment allowance on the special rate pool first. So that's why I added them first. So I added the additions of the special rate pool, excuse me, which are £250,000 and £150,000, which are integral to the integral features to the building. You remember? So which are £250,000 and £150,000 given in the question, lift for the office building and the solar panels. So altogether £400,000. Now that will be eligible for annual investment allowance, but annual investment allowance for our current tax year is £200,000. It was a little different in the previous tax year. For our current tax year, it is £200,000 for a whole year. Now remember that he has made up accounts to 31st December 2015, so which is 6 months worth of accounts, 6 months long accounts. So that's why we will proportionate our annual investment allowance as well. So 200,000 into 6 over 12, which will be £100,000. So that is our annual investment allowance. Now this annual investment allowance, which is £100,000, this is our capital allowance. So that's why I've written our £100,000 capital allowance here. So that is because this column is for capital allowance. So whatever I am making the capital allowance, I will put final figure here as well. All right. Next things, what I did is after that I added additions to the main pool. So 100,000, 200,000, and £12,000. These are given the questionnaires as well. And now in computer is worth £12,000, then £200,000 worth of general plant, and van worth of £100,000. So altogether £312,000, and it will go into the main pool. So I've made the total of that, and it will go into the main pool, £312,000. After doing that, I did some additions to the cars as well, but there were different cars given in the question. A car with 150 grams CO2 emission worth £10,000 will go into the special rate pool because it is more than 130 grams per kilometer, which we have seen. And a car with from 75 grams to 130 grams will go into the normal main pool, and it is worth £9,000, and it has I've put it in the main pool. Now £10,000 was because it was 150 grams per kilometer. That's why it went into the special rate pool. All right. Now other car was obviously less than 75 grams per kilometer, so it was eligible for the full first year allowance of 100%. So £20,000 was eligible for the first year allowance. So this £20,000 is first year allowance, and it will go into the capital allowance section. So this first year allowance will go into the capital allowance section. So it is here. All right. You can either make the capital allowance section here, or if you want, you can do it beneath that as well. But there wasn't any space beneath that, so that's why I've written here. But it is a proper way as well. But make sure while you are doing it, it should be this 20,000 should be parallel to this here as well. So I have messed up a little because I was doing it quickly. So please make sure when you make this 20,000 here, it should be parallel to that on the very right side as well. Or another way is to just write down beneath that, stating that it is annual investment allowance, it is special rate pool, it is writing down allowance, and like that. All right. So this 20,000 will go there. Now writing down allowance of 18%. Obviously it will be for 6 months, so it will be 9%, and it will apply on the main pool. So I've taken that as well. So it is 9% of 341,000, and it is 30,690, and it is here as well in the capital allowance section. Likewise, 8% writing down allowance on the special rate pool. 8% is per annum, so we will have to take for the 6 months. So it will be 4%. The 4% of the special rate pool, I've taken it here as well, and that 14,000 will go into the capital allowance section. It is here. Now this 194, we have only taken in the laptop section. We have only taken 90% of that because it is 10% private use. Remember, we will take the capital allowance on the full basis, but while making the while calculating the capital allowance, we can only take the 90% of that. So that's why we have took 90%, and this 194 is here as well. All right. So that is a laptop for laptop with 10% private use. Now that is all of these are our capital allowances, and I think I haven't missed anything. These are all of our capital allowances, so 100,000, 20,000, then all of these three as well. And this is total of all of these, which is 164,884. Now I've deducted something out of that. This is £3,200. Now whereas it should have been £4,000, why did I took 3,200? Because we can only take the business proportion because it was 20% private use by the GEMS, which is the owner. So I only took 80% of that. Excuse me, because it was a balancing charge, so obviously it will reduce our capital allowance. So our total capital allowance was 164,884. So it will be reduced by the balancing charge of 3,200 pounds. So our final figure for the capital allowance will be 161,684. So that is the amount which is our capital allowance, and this capital allowance will be deducted out of our trading profit. It will reduce our trading profit, so we'll have to pay less tax on that. All right, so that's it for this lecture. I hope that you got it. If you want to note down the answer, you can do so. I'll just move on one side, and please make sure you note down as well, so that when you are revising this question, you might find it useful. All right, so that's it for this video, and we will see another question as well in the next video. I will show you a small question from the exam kit, where we will see that how to use a small balancing allowance of £1,000, less than £1,000, and we will do and we will start next chapter as well. Thank you very much, and goodbye.